Hey everybody, what's going on? It's James here with Crypto Common Sense, and I've got your Bitcoin slash cryptocurrency update for November the 29th. So before I jump into today's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. Before I jump into the actual charts, guys, I wanted to briefly talk about this course that people have been asking me about. So I had people commenting saying, hey, you should put together a trading course, and I started working on that, but when I went back and watched the videos, I felt like the videos were a little bit unclear in places. Also felt like there was some rambling going on. So I have a bit of a perfectionist streak in myself. I'd really like to redo some of those videos. So that's what I'm going to be working on probably the next day or two. I assume that I'll have all of them done by Sunday or Monday at the latest. So here's what I'm going to do. For those of you that have been waiting, I'm going to go ahead and I'm going to put a link in the description. If you want to go ahead and grab your discount now, you certainly can. I would definitely appreciate it. If you want to wait, that link will be available all the way through Monday. That way I have a chance to get all the videos done. Completely up to you guys. I wanted to give people a chance to join because I said it was going to be done today and I didn't quite get there, right? Thanksgiving and shopping and family, kind of took precedence over work. So that's where I'm at on the course. Okay, again, most of it's done. I just want to reshoot a few videos, polish some things up. All right. So again, check the description if you're interested. It'll be a deeply discounted link to join that trading course. So let's talk about Bitcoin, guys. So first things first, been a pretty good day so far, right? Woke up a little bit earlier and Bitcoin was raging, which was a good thing for me because I'm a bear. So once it went up here, and this is why it was good for me, once it went up to this level, I was able to get off a short at 78.48, I believe. Let me check, I don't want to lie. It was, 7,848 even. Okay, so popped open a short up there, but what I did, popped open two, right? I popped open one on BitMEX, and then I popped one open on Kraken. So the one on Kraken, I went ahead and closed it, took a nice, I think it was like about 1.5% win on that one, and then I left the one open over on BitMEX because my plan is to add to the short if price continues to move up, right? If it moves down, great. I've at least got a position I can make some money on. But if it continues to move up, which it might, then I can double down and layer into that short position. So let's talk about it. Why am I short? Why am I still bearish? All that good stuff. Okay. Well, first thing I'm going to look at is a 3-day chart. Of course, if I can find my 3-day chart, got quite a bit going on here. So this is my 3-day chart. This is my quote unquote money maker for the last couple of months. This thing has been great. Basically, we're still inside of this bear market box. You can see we got our bounce, which we talked about a few days ago. This green candle actually closes today, so it closes in a little over 6 hours from now. So that's going to be interesting. And when I look at this green candle, if I go back here and start drawing resistance lines, talked about this in another video, right? You can see how this was resistance and support, resistance, right? What we actually did was on this little wick, it's just a tiny little wick, but so far that wick came up and basically kissed that line of resistance. So I think, and I could be wrong, obviously, but I think that's probably the pump, right? I think we'll probably move back down after there, and we could see something like this here, where we get, maybe we're in this part of it, and we get some downward movement, something like this, down to this level, come back, kiss the bottom of this box, and then have a nice pump up to 8,500 or so. That's kind of what I'm expecting. Okay, let me show you why. Get rid of these lines here. So this short zone is played out. We don't need it anymore. But if we draw some Fibonacci levels or a Fibonacci retracement, extension, I think I talked about this a couple days ago. It gives us a target of 55.16 for this trend, and right now you can see that we actually tagged this 78.6 and we got a nice little bounce. Okay, I don't know how low this thing is going to move. If it does start moving back down, I kind of have a hard time seeing it go this low, right? And the main reason that I wonder if it's going to go that low is because it would be outside of our downward channel, right? If we put this on the closes, our downward channel looks something like this in the 3-day. You could even say maybe something like this, right? So I think, for me personally, I would have a hard time seeing this going under 6,000, maybe 5,800 lowest, if it does have some type of repeat like it had back in late October, right? Maybe move down to the bottom of this thing. And what I should probably do is pull up a daily. This will be a little bit easier to talk about. So this was that channel, right? And essentially what we did back here before this big pump was we just rode along it where it was support. We came up, we retested the 200 moving average from underneath. Then we had another drop where we moved right back down to the bottom of the channel. And then we had this huge pump, okay? So essentially, if we move back down to the bottom of this channel, again, depending on where we hit it at, if we hit it, if we hit it a couple weeks from now, it's still $6,200 is going to be the bottom. So if we were to get all the way down to 5,500, we'd have to break out of that channel. I find that unlikely. Not impossible, but unlikely, okay? So when I'm looking at this, I'm really thinking probably about 6,000 to 6,200 is going to be where this thing kind of stops at before it has some type of relief rally. Making a lot of assumptions, of course, which is a little bit dangerous at times. But let's say that it does come down here. Let's just say it touches right here, around $6,100, right? That's going to put our 61.8 fib up here, right around the bottom of these tails, which I talked about in past videos. And that would be what I would be looking at for like a really nice size short position, right? I'd be looking for this to come down, touch this downward trend, somewhere around 6,000 to 6,200. I'd be looking for my 3-day RSI to curl over, come down, touch the bottom of this box again, and then I'd be looking for some type of pump, right? And I think with that pump, if it happens, I got to be really careful because it could be another pump like this where it's just moving back to the top of the channel, but it could also be that we end up breaking out of our down channel and that ends up being the bull run or the start of a bull run. I think that's unlikely, but it is possible, right? You've got to remember that as much as I love these golden short zones, we are currently playing around in the golden long zone as well, right? Look at this. I mean, we're right down in that pocket. This whole area would be a place where long-term investors might be looking to go long on Bitcoin. So the fact that we dipped down in there on a tail, yeah, it does, it does present a little bit of a bullish case from that perspective. I don't think it's enough to go long, right? But I will be watching it because if we come back down into that again and start putting a double bottom in RSI down here, it could be that, hey, that's it. That's as low as we're going. Maybe it's 6,000, maybe it's 6,200, maybe it's 5,500, who knows? But I will have to watch it. And I will be looking for longs, right? If I can find a good reason to go long at those levels, I will. And most likely I'll go long with spot, which means I buy back my Bitcoin that I sold. And then I'll ride that as high as it goes. And I'll be watching to see what happens if it gets back to the top of the channel, right? So for example, if I buy Bitcoin, let's just say over here somewhere, halfway through December, right? And it starts pumping up, maybe it pumps up to here around 72, 7,300, right? Maybe it pumps all the way back up to here, who knows, right? But I'll be watching that, and if it starts to look like it's going to falter, then I would jump out of that long position, and then, just continue waiting. I still think at this point, just to be very clear here, I still think that we are going to go down and fill in our liquidity gap down around $4,000, right? So I don't want you to think, oh, James has flipped bullish. No, not at all. But I do think that, it makes sense to look for long positions when you're tagging the bottom of this channel, right? It's been a very, very profitable opportunity each time it's come down to the bottom of this channel, and you've been able to back it up with bullish divergences and things like that. It's tend to pay very, very well, okay? But this right here, I don't think this is the pump. I don't think this is the pump that's going to go straight to the top. I think if anything, this is probably more like this pump here or this pump here, and it's going to move down. And if you remember, I did a video 3 or 4 days ago saying, I want you to think about 7,900. Pay special attention to 7,900. Remember this number, right? And if you look, this candle got all the way up to 79.30 on the CME, right? It's textbook stuff. It's a textbook bearish retest of support, flipped resistance, okay? So this pump, not at all surprising, not at all unexpected, right? This is all very textbook stuff. The 200 MA, I mentioned that it was going to keep moving up for a while. It takes a while for it to catch up with price, and it has moved up on the CME all the way up to $8,064. So, wouldn't surprise me to go up there and retest that as well. Not at all, right? Also remember though, on the daily, on like a Coinbase or a BitMEX chart, our 200 moving average is way up around 9,400. So we could get some kind of crazy wick up to that area as well. So if you are trying to go swing short down here, I don't think it's supported. Okay. When I went short earlier, like I said, I'm looking to layer into that short position because this is not, there's nothing here that says, hey, I should be swing short right now. Okay. There's just not. When I look at this daily chart, there's no bearish divergence here, right? When I look at a, resistance, yeah, there's resistance. That's about the only thing, right? There's some resistance. And depending on how you draw your Fibonacci levels, you could even make the argument that this is potentially a golden pocket zone, right? If you drew them from like right here, up around that golden pocket, I could see that argument. Actually, right here, sorry. I could see that argument, right? That's one of the reasons that I went and took the short position. But it's also, I closed, like I said, I closed one on a scalp and I kept one open. So, there is some argument there, but I'm not seeing what I like to see. When I go swing short, what I really want to see is I want to see that price has been, overbought. It's coming out of the overbought and hopefully putting in some bearish divergence. Let me give you a classic example. Way overbought, right? Super overbought. Up here around 85 in the 4-hour. Price is way up there, but the close was right here, okay? So your close was way down here. And then if you look down here, RSI has moved all the way down to 74, so you got this downward sloping RSI on the 4-hour. At the same time, you have this upward sloping RSI on price, right? If you're going to close, there you have it. There's your bearish divergence on the 4-hour chart. That bearish divergence occurred at $9,741. So if you'd have shorted that and just been patient, 33% drop from here to here, right? That's what I'm looking for a swing short. I don't want to start swinging for shorts when RSI is in this chop because it can easily fake you out, look like it's turning over, and then suddenly do something like this where it shoots up into this territory, right? So, and the 200 moving average in the 4 hours up around $8,500, which is another important level of resistance. So, for me personally, I'll wait. And like I said, if I miss, a big position, no biggie. I've got a small position. It's fine. So that's kind of what I'm seeing on the daily and the 3-day. If we look at the weekly chart, let me find a weekly chart here. This was the, these were the two lines of resistance I was really watching in the weekly. This was the first one. Again, it was right around 78.59. The price so far today topped out at 78.70. So again, a textbook bearish retest of that line, right? Not really anything surprising at all. When we look down here, we did get a nice bounce off of this, RSI support. And if we look, what's really interesting, guys, is price came up here in October. It basically closed at the same level that it closed at in April of 2018, right? Which was very interesting because RSI was also at the same level, or roughly the same level that it was in back in April of 2018, right? So I think this is probably about where we're at in our bear market, right? I think we're probably somewhere in this area. And as many people are, still trying to call this a bull market, which just blows my mind, right? We had a 3-month rally from April through June, and they're calling it a bull market, but we've had a 5-month downtrend, and still people refuse to say it's a bear market. Well, bear markets in Bitcoin last usually about 12 months, right? So if this is a 12-month downtrend, we're probably not going to bottom out until sometime right around May or June of 2020, which if you're a halving fan, it actually makes sense, right? Bottom out right before the halving, give big players a chance to accumulate, and then pump it after the halving, right? It does make sense from a story perspective, if you will. I just, none of this is really shocking to me, guys. It's all playing out like textbook bear market stuff. And I just don't see any reason to get bullish right now. If we could close above this line, then I think it's very likely that we'll go up and retest this line up here, right? Maybe not all the way up to 9,500, but certainly I would expect us to get at least up to this $91 to $9,200 area, right? That's what I would be looking for. If we can break through this and close above it, I think our next move is up. But right now, this just looks like a relief rally. We have 4 red candles in a row, which again is very abnormal. It's only done that twice in the last 3 years, and both times we're, in this downtrend. There's right here, there's 4 red candles, had the relief. Right here, 4 red candles, and now some relief. Okay, But me personally, I'm still bearish, which shouldn't be a surprise. So let's take a look at altcoins next. Really, really liking this little pump that we're getting on alts, but it's really not, it's really not that impressive when you compare it to Bitcoin. It's not like Bitcoin stayed flat and then alt suddenly pumped 10%, right? Bitcoin went up about 19 or 20% from its bottom so far, its bottom, last week, and alts have done about the same thing, right? Not really breaking away the way that I would expect them to. I don't need RSI for this. If we start drawing, I have no idea where I'm on the wrong chart. I thought, where are my lines at? So Litecoin's a good example, right? They had this line of support down here. It came up. Basically, this was the textbook line of resistance, and hasn't made it through it yet. So if we look at all the alts, same thing, right? We came back above this line of support. We came down for a really nice bullish retest, right? Bounced off of it and moved all the way up to this level in here, which if you look, had a whole lot of touches, right? Where it was support. So of course now it's resistance, and we kind of stopped there. If we can break above that 64 billion area, then we got a chance at running all the way up to this level up around 70 billion. But again, I'm not looking for long positions on altcoins, okay? Altcoins, if Bitcoin dumps, we all know the story, right? They tend to dump with it. So the good news is, though, this Head and Shoulders, the smaller one here, is played out, right? There's your target, right? Had right around a $4.4 billion target. Pull it down, boom, right? So we don't really have to worry about that anymore. That's done and over with. The bigger one is still in play. This really, really ugly one that has a target of 0, okay? But I don't think they're going to 0, so not too worried about that. I think worst case for alts, well, not worst case, but I think the likely case for alts is, if they do start falling, they might go down here, filling these gaps down around 40, 41 billion, okay? And then if Bitcoin just absolutely gets demolished and it does go back down and retest 2013 highs, yeah, then I think alts could actually go way down here and start looking to fill in this gap right here, down around 16 billion, which nobody wants to see happen, right? I don't think that's actually, I don't know what's going on with this big gap here. I think it's more of a chart issue than anything else. But there was obviously a big jump there. So, it could be that they do move down to this $15 billion area if Bitcoin loses its previous lows in December. So, long term, it'd probably be nice. I mean, can you imagine for a second, if Litecoin going down to like $4 and people are like, oh, that would never happen. Well, Litecoin was $4 in 2017. What a lot of people don't remember because they weren't around and they've never looked at the charts is Litecoin was actually around $3.30 or $3.40 in January of 2017, and it ran all the way up to $420 that year, which is more than 100x. So this idea that this coin that went up 100x should be worth around $100 or $50, I mean, that's a little crazy because that's still up like almost, even now at $48 or whatever it is, it's still up more than 1,000%. So there's still a whole lot of retracing that never happened, and most of these altcoins look the same way. Most of them have those giant run-ups where they've never actually retraced, right? I mean, they've retraced some of it, but here's Litecoin. If you look at Litecoin on a monthly chart, this right here is January 2017. Way down here. See that? It's never came back down there and retested those old levels. All we got was this giant M, okay? And this is not a confirmed M. It would have to break through this neckline to be confirmed. But that's what I'm saying, is people are like, oh, $50 is cheap for Litecoin. That's because they're comparing it to $400, which was really just one crazy wick, right? Is it cheap? I don't know. But I do know that it was $3, back here. This month closed at $3.85. Sorry, that was February. January closed at $4.09, January 2017. So it's still up over 1,000%, guys. Keep that in mind. Most of these alts look the same way. They're all still up thousands of percent. It's a little bit ridiculous. So that's kind of where I'm at, right? Again, right now I'm in a small short position on Bitcoin, looking to cost average that short position if it moves up. I would be looking to cost average around 8,500, add a little bit to it, and ideally where I would start looking to go really hardcore with it would be up around 9,000 to 9,100 if it was backed up by bearish divergences. Okay, if it gets there and it looks strong, then it could be that it blows right through it and pulls in October all over again where it does something crazy like this. And in that case, I would not be shorting it. I would actually be closing my shorts and waiting for a better entry. Okay? With all that being said, the video is obviously getting fairly long, so I'm going to go ahead and wrap up there. Please remember that I'm literally some guy sitting in a spare bedroom, so nothing in this video is financial advice or trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you guys are interested in the course, don't forget you can check the description to go ahead and join the early bird. And other than that, you can obviously check the description for links where you can follow me on TradingView, Twitter, join my free Facebook group, all that good stuff. Don't forget to leave the video a thumbs up. Don't forget to subscribe to the channel. And don't forget to trade safe. All right, this is James with Crypto Common Sense. I'll see you in the next one.